We at Great Lakes Hybrids have been serving generations of farmers with outstanding service, the latest technology, and new yield-producing proprietary genetics. We're happy to partner with Farms.com Risk Management to bring you this latest market update.
Welcome to the Farms.com Risk Management Daily Market Commentary for May 20th, 2011. This is Moe Agostino, Managing Commodity Strategist at Farms.com Risk Management. Well, I was away last week on vacation, and I was traveling through the U.S. Eastern Corn Belt, and I'm going to be honest with you, whatever the USDA is saying that Michigan and Ohio are doing in terms of planting, very little's going on. I mean, it was pretty wet throughout the entire week through Michigan, Ohio. Very little field work, very little planting going on. So the crop progress report comes out next Monday. Shouldn't see much more improvement in those states. So, but today I wanted to just briefly talk about Lynn Group's projections. They're lowering significantly acres for 2011 corn and beans in the U.S. Let's start off with the U.S. corn balance sheet. This was the May WASDE report where the USDA reported that ending stocks would come in at 900 million. Slight reduction in demand. And acres unchanged at 92.2 million, according to the March Planning Intention Report. Now, the Lynn Group is suggesting that acres now are going to be 89.538 million acres, 2.64 million lower than the March Planning Intentions Report at 92.2, still higher than the 88.2 in 2010, but with a lower acres with yields at 158.7, you can see ending stocks drop to 511 million bushels. That's not good. Now, imagine if we dropped the yield to 155, because now they're talking about lower yields going forward as well, and you got ending stocks dropping to 205 million. Where do you think prices are going to go from here? Now, remember, markets tend to factor all this information in. They know that we're delayed. We know that we might have to reduce acres. So be careful here, because I think markets are trying. We'll look at some charts here a little bit later. They're trying to retest those old contract highs. Let's talk about beans. Beans ending stocks came in at 170. Acres 77.4. Lynn Group is estimating 75.094 million. That's 1.515 million lower than the March Planning Intentions. Still higher. This is still about 2.31 million less than 2010. Ending stocks for 2011-12 came in at 170. But if we use the lower acres, you can see that the number drops considerably. That at 95 million bushels is unacceptable to the market. Beans have lagged. They'll start to probably catch up in terms of performance, probably outperform both corn and beans in the month of June. If we lower the yield to 40, you can see that there's no room for error. Let's talk about the wheat. Wheat came in at about 702 million. Total wheat acres of 56.3 between hard red winter, spring, and durum. Lynn Group is now suggesting that spring wheat acres are going to come in around 14 million. That's about 0.4 million less than USDA numbers. So if we see a drop in yield down to 39, you can see that ending stocks would drop down to about 500 and change. That's going to take time to reflect in USDA reports. It might take till July or August of this year. Now, this is the July 2010 Corn Daily Futures chart. You can see the rise of 15.5% in 7 trading days. You got that resistance coming in around that 740, 750. For guys who still have some old crop in the bin, you may want to place it. I'm placing a hanging order in at 783, just a tick below the old contract high, 784. For new crop corn, remember, do not book any more corn bushels forward unless you have it planted. If you do have it planted, you're comfortable, then place an order in around that 681, which is a tick below the old high at 682 3/4. This is July soybeans. Again, lagging both the corn and the beans. Approaching that $14 old crop. You got any in the bins? Put a hanging order in at $13.99. We're not almost there. You might catch it next week. For new crop beans, again $13.99 as a hanging order. This is July canola. Again, as the beans lagging a little bit. Old crop, new crop, placed a hanging order around that $5.99. This is July Chicago wheat. It's up approximately 9.4% in about 7 trading days. And for old crop, we'd place some orders in 886 if you have any left. For September, December, new crop, you could even, some folks may even use July. We're looking at 927 hanging order in for September, 934 for December. This is Minneapolis. Old crop, 1053 is a hanging order. A new crop, September, 1050 or December. And then the last one, Kansas City, old crop 999, new crop September 1019 and 1033 for December. So we waved the yellow flag in the May WASDE report. We were concerned that maybe this thing's coming to an end. Not so much anymore because of weather again, but be careful here. So place those hanging orders and look for a new recommendation we'll place out early next week for a detailed analysis of what you should be doing here going forward. So, by the way, basis has also improved dramatically, particularly for corn. We think corn, if it's going to take off and go to new all-time ridiculous levels that some are predicting, it might happen in August, September. Corn's very tight right now. Demand's still quite strong. I think it's the month of August, September when you don't get any, where you can't find any new crop or old crop bushels, that I think the market could explode. Basis getting very strong. I think it's going to improve here, both for old crop and new crop. In other news, we've got June options expiring today off the July futures contract, causing probably a little bit more volatility than normal. Renaissance Capital is predicting that corn prices and wheat prices between August and July or June of next year, corn prices could rise by 35%, and wheat prices by 25%. Those are considerably higher numbers than where we're at today. Cattle and feed numbers for today, looking at 107 for feed for May 1st. Placements for April. And marketing's at 97. We got the government of Saskatchewan saying plantings at 23% versus 28% last year and 44% for the long-term average. We got some predicting that La Nina is going to stick with us through early June. We got the NOAA predicting that we're going to have about 12 to 18 tropical storms, 6 to 10 hurricanes. 3 to 6 of those hurricanes are going to be major hurricanes. The season's usually from June 1st to November 10th. We've got harvest in Oklahoma about 1 to 2 weeks earlier than normal. Yields coming in between the mid to low teens, protein a little bit better than expected. Australian crop projected at 24.9 million metric tons this year. Recent rains helping planting. And in today's cold storage report, they're looking for frozen pork supplies at 586 million pounds versus last month at 577.2. So don't forget to put those hanging orders in. Have a great long weekend. Until next week, take care.